Apple is reportedly on the verge of finalizing a landmark deal with Google, committing to paying approximately $1 billion annually for exclusive access to a custom, ultra-advanced version of Google's Gemini AI model. This 1.2 trillion parameter model is 8 times more complex than Apple's current 150 billion parameter cloud-based Apple intelligence model. So this will serve as their foundational engine to supercharge Siri, thank God.
I'm wondering whether Google's feeling a little bit more, or Apple, or either one, feeling a little bit more comfortable that given that the government has changed, Linda Khan is not there any longer, and whether they're thinking that they can push the envelope from an anti-competitive perspective.
All right, John, welcome back to the tank. Have you calmed down from the all the Fed budget talk? Has it kind of washed over you, or are you still swimming in it?
Yeah, it's like let's move on. Let's focus in on the execution, and let's just hope there's not an election right now. I guess in a month's time there'll be the final vote, or a few weeks time. I can't remember what the time frame is. I just hope, let's just not have another election here, and then give the government a year to show what it can or cannot do. And, there's some good stuff in there, but there was also, I think people are still getting their hands around the massive deficit.
Yeah, I think they are, but I think execution is the key. And you know who's talking about execution front and center? Jack at Clio. Man, is Clio executing. $1 billion acquisition, $5 billion valuation on the recent Series G round that was just announced, a $500 million round, which was $350 million in debt financing to basically fund the acquisition of VLEX, the Spanish American peer that they acquired. This was announced back in July, but now the deal is officially closed. And this really catapults, obviously, Clio's total funding to $1.7 billion. With new capital, 350 VLEX employees are supposedly integrating into Clio's 2,000 strong workforce. So merging these two legal tech leaders plus their databases, it basically becomes one of the main, premier data sets in the sphere of legal tech alongside Thomson Reuters and LexisNexis. So, what are your thoughts on this? Hats off to Jack and the team he's been building there, but this is fantastic news.
It's incredible. Jack reminds me how I turned him down, I think 2 or 3 times. And not because I didn't love the guy, because I just thought that the TAM was so narrow that, and yet he just keeps on digging the TAM deeper and deeper. This is a vertical strategy. I think I can't think of anyone else in my recent memory who has verticalized a strategy so deeply. Perhaps the only other example is Adam Belcher at Magnet Forensics is another example. Two that I had an early opportunity in, and both again, my brain thinks wide, and sometimes I just don't think how deep you can go. And Clio and Jack in particular has been proving me wrong every time. So
I thought you would have learned your lesson on Shopify. I thought you would have seen the TAM expansion opportunity with Shopify, given how many online merchants they started with and where they were going.
yeah, the thing with Shopify, that was the TAM was commerce. So in the investment memo back in 2013, we said it was trillions back then. But if you remember, Clio way back when was just in the legal space and really being the operating system, but they kept on digging into research and then into the court systems, etc. So they really expanded the full supply chain. That's the part that I didn't see nor understood. I was asking him, you got the law firms, but are you going to go the accounting firms and consulting and etc. and go wide that way? And he said no. And I just thought it was too small, but I'm obviously extremely wrong on that one.
No, understood. But we all make mistakes, John. Question here, given that they're doing 400 million in top line, doubling since mid 2024, serving 400,000 customers, this is a pretty big debt financing for still a private company, 350 million plus the primary, but I believe was led by NEA and TCV, Goldman Sachs, and others. This followed the $900 million Series F in 2024. I have no idea how much is primary, secondary, but don't you think at this point, when you're taking on this much debt, the public market debt financing terms are going to be better,
No.
slightly better than being a private company still?
I would agree with you. You and I use the example of Meta. Now, let's ignore their SPV stuff. They're getting debt financing. Now they're at 5%. It's just slightly above the US prime rate. So, if they were public, I wonder if they would drop down. I don't know what their debt financing costs are right now, but I would agree with you. Presumably they would be able to knock off a few hundred basis points, but it's a great question.
Now, I was curious about that. Speaking of going public, we've got a watershed moment here for Canadian quantum tech, a company you know quite well. I'm not sure how much you can speak about it, but Toronto Xanadu has finally inked a SPAC merger with Philadelphia-based Crane Harbor Acquisition Corp. SPACs are back, baby, paving the way for the company to do a dual listing on NASDAQ and the TSX for the first ever Canadian tech debut on the TSX in over 4 years. This values the company at $3.6 billion pro forma market cap, $3 billion pre-money plus the 3.1 and $3.1 billion in enterprise value. This is obviously tied to a private investment in public equity. They can raise up to $500 million, and this includes $275 million of that pipe that is being led by new investors like AMD, BMO, CIBC Asset Management Arms, MCAP Ventures, and a couple others, existing investors like Bessemer, Georgian, and your old firm, Omers Ventures. So the $225 million, though, could come from the SPAC trust if there is conversion from those SPAC holders. What do you think about this play here? I don't know how much you're able to say, but is this transaction one that you had seen coming?
Yeah, I mean, I saw it as an alternative. So I would state my bias and on this up front. When I was at Omer's and it was referred to me from Ken Nickerson, I was looking at the space for a number of years and absolutely loved what they were doing and did the seed A. And then when I left, they may or may not have done the B. I can't recall offhand. So I'm extremely bullish of Christian and the team. And Christian's a close friend, and I do help him quite a bit to this day. The part that was disappointing is that if they had their choice, I'm sure they would have chosen a private transaction led by private capital in Canada, largely pension fund capital. It never came. And I know Christian was seeking opportunities around the world, but this quantum is a very sensitive industry. And a lot of countries around the world are using their own domestic capital to support this from a sovereignty perspective. So they need to get this funded, and they saw the opportunity for the SPAC. And like a great CEO, if this is the way how you got to finance your business, so be it. So it's probably a little bit more premature than he had hoped. But at the same time, some of the valuations of these other public quantum companies who I'm not as bullish on have crazy valuations. So, you could take advantage of a temporary dislocation, but at the end of the day, this was a financing transaction. And if he gets the capital that he needs to build this out, this might be a spectacular choice, despite it perhaps not being his first choice.
Absolutely. With the retail investor frenzy around quantum stocks, obviously, like D-Wave and stuff, I think, there's no reason why they shouldn't take their shot at taking advantage of some of that momentum going public here. But yes, we all know Christian was trying to raise capital around the world, but maybe the sovereign local issues were not always available. And the timing in where he needed to close around was probably getting shorter. But then the federal budget comes out with all of this funding, which also may help Christian no matter what, being public or private. But so now he's got a couple of balls to juggle in the air, which is great. The stock responded positively. It went from 10, which is the standard SPAC issue price or so, up to 15, now trading back it down around 13. So that is an indicator that people are bullish on the acquisition target and the willingness to get the votes to convert into a public equity. So we'll see how this one plays out. Congrats to Christian, and hopefully this one goes through. Speaking of some other decisions that are happening in moving markets, did you see the final package that was awarded to Elon Musk on his first $1 trillion 10-year CEO package?
Yes, I saw that. Yes.
Yeah.
It was unbelievable.
Yeah, I think the headlines are really misleading. I know the media is gravitating towards becoming the first trillionaire. That's the headline that everyone gets. But I don't think they really understand how massive of a lift this has to be for him to achieve this, number one. Number two, how much society will benefit if all of the things he does have to accomplish get accomplished. And three, how much value he will create for the entire United States from an economic standpoint if he does achieve this. So I know it's all pinpointed on the man, but I do think that there is a lot of things underneath it that a lot of people are going to benefit from, besides just obviously if, that's a big if too, John. So just to list out some of the things, he has to get like, I think it's 400 billion of EBITDA, 400 billion. Saudi Aramco has 230 odd billion in it. So he has to beat the largest company in the world, which has a commodity and all the greatest oil reserves in the world, in a software robotics car company. He has to hit a market capitalization of 8.5 trillion, which is a massive leap from the current levels around 1.2 trillion. And people still think 1.2 is crazy.
Yep.
So there's a lot of things that he has to do to get this to that level. And if he does hit those numbers, I just don't think it's the man that's going to get all the benefit. There's going to be a lot of other benefit factors.
Yeah. No, the other thing is, when I saw the thresholds, they were absolute insanity in terms of the thresholds. And by the way, making many trillions for investors, including pension funds, etc., all around the world.
Employees, yep.
Yes, employees, everyone forgets about that. They get fixated on, and I've seen some of the pundits, right? They're saying, nonsense of, oh, how can anybody be worth $1 trillion? Like, if he doesn't hit those insane amounts, a lot of it is quite binary. And he's willing to bet on himself. And, people talk about, well, there's, people starving and how could somebody make $1 trillion? But for God's sakes, like, would you do this? Would you bet at all and betting at all red? And if the shareholders who overwhelmingly voted for it said, I'm willing for him to do an all or nothing. Like, so are you calling all of the shareholders morons and immoral, etc.? Or are the shareholders going, hey, you know what? This is a great bet. So these armchair quarterbacks, why don't you let the shareholders speak? Because the easy answer is, you don't like it? Dump your stock. Period.
That's it.
That's the beauty of the capitalist system.
Throw shade on something you have no impact on, no incentive on, get out of the way and let people who are actually doing it make their bet.
And who cares?
I know.
At the end of the day, anyways,
it is very frustrating. It's like the 9 shareholder lawsuit that the guy threw out the company on their last package that he obviously had to defend and move the company from Delaware out. It's interesting to see back in the news this Google Apple partnership again. So the previous one, for people who weren't aware, there was the Google already paying Apple $20 billion yearly to remain its default search engine for iOS, right? And this was where a bunch of the lawsuits and antitrust stuff was coming around the time they had Google in the mix of being broken up. Well, now there's new developments here now with the AI arms race. Apple is reportedly on the verge of finalizing a landmark deal with Google, committing to paying approximately $1 billion annually for exclusive access to a custom, ultra-advanced version of Google's Gemini AI model. This 1.2 trillion parameter model is 8 times more complex than Apple's current 150 billion parameter cloud-based Apple intelligence model. So this will serve as their foundational engine to supercharge Siri. Thank God, because Siri is literally the worst thing I've ever had in my life.
It's terrible.
But it's just interesting that after that $20 billion fiasco, you're back signing more partnerships. They did weigh competitor options. They like OpenAI and Anthropic. There was a quote of around 1.5 billion per year, but they were favoring Google's technology mostly just due to its scale and their established existing partnerships with Google as well, given the search engine relationship. So I thought this was pretty bullish for Google. They had great numbers that came out, continuing to show strength of demand for the cloud compute they offer, as well as other business lines continuing to perform very well. So, with the big tech entanglements and ongoing DOJ probes into Apple Google ties, I thought this was super interesting to announce this at the same time, or potentially.
Yeah, I mean, I was surprised on it just because, you just gone through this, and here we go again. Now, what is interesting to me on this time, though, is when you do a Google search, and now, of course, you're getting the summary up front from a Gemini perspective. one of the concerns that Google has, of course, is if you get your answer, all of a sudden, how do you monetize in your old advertising way if people are now not using the Google uh, search feature? But this kind of answered the question on how they might do this. Power other technology companies like Apple and make the money. But I'm wondering whether Google's feeling a little bit more, or Apple, or either one, feeling a little bit more comfortable that, given that the government has changed, Linda Khan is not there any longer, and whether they're thinking that they can push the envelope from an anti-competitive perspective.
Wow. That's pretty impressive that they've quickly decided to just throw very fast change their opinions, but we'll see. This headline I got to get your opinion on because even as a venture capital investor full time, I found this to be a little bit too much. Robinhood is announcing products left, right, and center, and they just recently announced plans to offer investors access to a private AI fund. Get this, Robinhood plans to give amateur investors access to private AI companies. This was in the Bloomberg and Financial Times, whose valuations obviously have increased significantly, the CEO said, and they plan to offer tradable shares in this new fund managed by its subsidiary Robinhood Ventures, and they will invest in mostly highly concentrated portfolio of 5 or more private companies, and they may borrow money to boost its return. There will be a closed-end fund, and it will be giving normal people exposure to private AI companies instead of worrying about whether there's a bubble forming in the sector that they don't have exposure to. Thoughts and prayers.
But that was my reaction to, seriously? Oh, I feel so badly for those retail investors that can't get a piece of the action.
The action's happening in public right now.
Yeah, well, yeah. You get Nvidia, get Meta, get all of those. You can get a piece of the action, but you can't get a piece of OpenAI and Anthropic. I guess that's the play. But again, Matt, I'm not trying to be a negative Nelly here, but this is again what happened in the .com crisis, right? Who got hit at the end of the day was all the retail folks. It's like,
Yeah.
man, like, folks, it's one thing for VCs to do dumb things. The FOMO frenzy. Does this end badly? Now, it could end great and individuals do well, but I still do think that there is, you want an AI, you can go into the Magnificent Seven right now and get some pretty good exposure, and particularly with NVIDIA.
You can go into crypto and get exposure. You can go into so many different asset classes. I just think this brings a lot more attention to something that probably is not worth the squeeze and just ruins it for everybody in a way in terms of like getting people caught up in these types of things. And it's just really unnecessary for like how much value it may bring. It's a good headline. Totally get it.
Yeah, and Robin doesn't care. Like,
yeah. John, you got to be careful. There's a new deal that was just announced, by the way. Visa and Mastercard is changing the ways in which they are charging interchange fees. They're lowering them. I don't know if you noticed this.
They have to.
Yeah, but hold on, though. It's going to affect you as a customer. Visa and Mastercard are finally close to ending a 20-year legal battle with the U.S. merchants. And if the deal goes through, it could really change how the credit card rewards are actually working. So basically, the gist of it is the companies are going to be lowering their interchange fees, right? These are the fees that the merchants pay every time you swipe your card. Usually about 0.1% over the next few years is what they're going to reduce it by. But this also will give the merchants more freedom to decide which cards they might accept. So if your lower interchange fee cards are the ones they want to accept, they can, but a higher interchange fee card, they may not. And because the higher interfee cards that they get money from help create better reward incentives for those elite cards, you may not be able to use those elite cards at certain merchants.
Yeah.
So this could reshape how much value you get from credit card perks in the future, I think.
Yeah, but when you blow through the smoke, though, the reward programs are there for you because you're paying massive interchange fees right now. So, it's kind of, and Canadians are the number one country in the world in love with reward points. But the question really is, if you weren't given these reward points and would take a savings of your purchases by, say, 200 basis points, which would you take? And I think if people really understood that you could either, in essence, get a reduction in your costs versus playing a reward card program, you might want to go and just get the reduction. That's number one. Number two, this is also likely in anticipation of what's going to be happening from the stablecoins front, in that the moment those rails are fully operating, and you have in the United States, for example, a company like Tempo, they're coming directly at the credit card companies. And there is this 200 to 300 basis point spread, which is going to get squeezed. So to me, this is the credit card companies starting to realize, real competition for the first time is coming through the blockchain, and starting to figure out how this all winds itself through.
That's really good point. I actually didn't think about that, John. That's really good for sharing. Thanks so much for jumping the tank today. Until next time.
Great. Thanks, Matt.